Hello guys, I hope you are doing well. So on this video, we will be learning how to precise a zone. We will learn how to make a larger zone into smaller one, which will also reduce the size of our stop loss and mitigate our risk. So guys, from this video, on this video, we will be ending the basic part of engulfing theory. From next videos, we'll be learning the advanced topics, advanced setups like hidden engulfing, high liquidity zone, confluence zone, key levels, and critical levels. They are a bit harder to learn and they have greater accuracy compared to the setups we have learned so far. So far, we have learned like engulfing buy, engulfing sell, engulfing buy fail, engulfing sell fail, and we have also learned engulfing meets engulfing. They have accuracy around like 50 to 60%. The concepts we will learn from next videos like hidden engulfing or high liquidity zone, they have greater accuracy of 80 to 90%. If your setups align with trend or market structure, you will have accuracy of 90% easily. You can also make very good profits with very small stop loss. So from here, we will be ending the basic part. From next videos, we will be diving into somewhat advanced topics where you need to practice a bit. They require you to practice every day. So let's start today's video. As you can see, I'm on a daily chart. I'll mark a zone on daily chart. You can see that this is an engulfing buy zone on daily. And you can also see that this zone is around 1976 to 1996, meaning this is 200 pip zone. Let's just say you are trying to buy on this zone at top level around here. If you take a trade over here, you'll have to hold it until all the way here, meaning you have to hold for 200 pips, which is not possible for most traders. You'll have, even if you take only 0.01 lot, you'll have to risk 200 pips to $20 on 0.01 lot. So to minimize the risk, we will try to precise this zone, meaning we will try to reduce the size of this zone, which also reduces our stop loss and will reduce our risk. So as you can see, on daily chart, on daily engulfing buy zone, to precise it, we will go to a lower time frame. I will go to H4 here. We know that H4 time frame is smaller than daily time frame. So let's go ahead. On daily, as you can see, there is an engulfing sell fail here. I will be marking the engulfing sell fail. We call it A plus B, engulfing sell fail plus engulfing buy. But since you haven't learned about it, let's just call it engulfing sell fail. I will be deleting the daily zone. Now we have precise the daily level, which was around 200 pips to H4 level. As you can see, this zone is very small, 82 to 88, only 60 pip zone. We have reduced the size of 200 pip zone to 60 pips. See that? The market respected this level and flew away. Unlike before, where you had to risk 200 pips, here you can take the trade on simply by risking 60 pips. If you want to further precise it, you could go to a time frame which is lower than H4. Here I'm going to H1. What do we have in H1? On H1, we have another engulfing cell here. I will I will delete the H4 zone.
ఎట్లా నిద్ర వస్తుందో తల్లి ఇవ్వట్లేదు బటన్ ఇవ్వట్లేదు చదవలే బంగారం ఇప్పుడు పండుకుంటే మళ్ళీ నిద్ర
We have two H1 levels here. Engulfing cell fail, and we have another engulfing cell fail here. We call it high liquidity zone, the below one, but you haven't learned it. I will be teaching you in upcoming videos. So the H4 level we have, which was around 60 pips, has been reduced to two H1 levels. The first level is only 30 pips, and second level is also 30 pips. See this? On first try, the market respected it and gave around 50 pips. On second try, it gave you more than 1000 pips. Give you more than 1000 pips on second time. I already told you in previous videos, as long as the candle does not close below the H1 level, the setup is still valid. Here you can see that although price tested this level 2 times, it failed to close below the H1 zone. So it's still a buy zone. And price respected it twice and gave us 60 pips on first try and gave you around more than 1000 pips on second try. When the price reaches this level, you should go to M15 or M5 and take setup based on high liquidity zone. I haven't teach you high liquidity zone, but I'll show you anyways. Here you can see this, the market tested this level and here it made an high liquidity zone. This zone is called high liquidity zone for buy. We have an engulfing cell which failed, followed by two engulfing buys. Engulfing cell fail, engulfing buy, and second engulfing buy. And here we have retest. This is what we call high liquidity zone. Don't worry if it does not make sense to you. I will be teaching you in upcoming videos. So just know that this is called high liquidity zone. Whenever price reaches our level, we should go to M15 or M5 and wait for high liquidity zone to be formed. And as soon as the zone is formed, you can take the trade and put your stop loss 10 pips below the high liquidity zone. From this level, from the lowest point of high liquidity zone, your sell should be 10 pips below it. That's how we take trades. Here I hope you are clear with how to resize a zone. I will teach you one more example. Here we have a daily engulfing sell zone, which is 120 pips. We will try to precise it. We will go to H4 time frame. Here we don't have any engulfing buy fail. We only have a simple engulfing sell. Let's mark it. If there was any engulfing buy fail, I would have marked it, but since there is no engulfing buy fail, I will be marking the simple engulfing sell down here. The 100 pips zone has been reduced to 70 pips zone. Here the market respected it and dropped. I will further purchase it into H1. On H1 we have an engulfing buy fail. As you can see, we have an H1 engulfing buy fail followed by engulfing. Let's see if market respected this level. On H1 perspective, this zone has been failed. As you can see that the H1 candle closed above this level, making it invalid. But on H4, it's still valid. On H4, the zone is valid because although we can see the big wicks here, it's still closed within the zone, within the H4 zone. So it's valid according to H4, but not by H1 level. Here too, when the price reaches this level, we will go to M15 and try to find high liquidity zone. Because the price is still valid as per the H4 level, we can still try for selling. This is engulfing buy. Engulfing buy failed, and we have the first engulfing sell here and the engulfing second engulfing sell here. Here you can take the trade. We got the you should wait, you should usually wait for retest over here because it drops way 40 pips below. You can also take trade here, but your stop loss will be 50 pips. So this is how we usually take trade. Market market zone on higher time frame like daily, and then precise it into H4 or H1. Wait for formation of M15 or M5 high liquidity zone and take trade on. This will be the criteria to precise this zone. If you are marking a weekly zone, you should precise it into H4. If you are marking a daily zone, you should precise it into either H1 or H4. If it is a H4 zone, it can be precised into M15. And if it is a H1 zone, it can be precised into either M5 or M15. Please note this somewhere, or you can also take a screenshot. This is the criteria to mark or to precise a zone. Weekly to H4, daily to H1 or H4, H4 to M15, and H1 to M5 or M15. I hope you have learned how to precise a zone.